Hi everyone, hope you're all doing well, and today we're going to talk about Beyond Meat and their recent quarter they brought out last week, their Q1, and we're going to go through it in detail, some things that I saw, some things that I picked up on the conference call, and this is the video you guys wanted to see when I did the poll the other day. It was very close actually between Beyond Meats and DraftKings, so maybe we can do a DraftKings video at some point at next week coming up as well, so I'll see if I can get that done for you. And any other videos you want to see, comment down below, let me know what you do want to see. There's a few other strong contenders in that poll as well, but yeah, we'll get on to Beyond Meat. Sorry about this video actually being up today. It should have been yesterday, but the problem is I ended up making a Patreon exclusive video that was talking about valuations. It took a lot longer than what I actually thought. I ended up spending about 6 hours on that video, which was on Saturday, and by the time I kind of got it all edited, recorded it, uploaded it, I was like, okay, I'm having the rest of the Saturday off, not doing any more stocks today, so yeah, sorry about that, but yeah, Patreon will always come first. And if you do want to see that exclusive video on Patreon, it was about half an hour long talking about valuations. To join it, the link is in the description. Join through there, you can see the video, and if you do want to start investing, there's some links to some brokers. But yeah, getting on today's video about Beyond Meats, we'll talk about what I saw. Smash the like button if you wanted to see this video, because we are doing it, and if you are new and you find it useful, make sure to subscribe. We are near 10k subs as well, so if we could get there this week, it'd be absolutely amazing. But Beyond Meat, so Beyond Meat for me this quarter was the last push through these horrible quarters that we've had, and now we're going to start moving on to the positives, I guess. I think this is the last kind of quarter that will stand out as being a bit of a terrible one, and we kind of knew that this quarter was going to be one of the last horrible quarters that we had. Now, if you are kind of new to this company, or if you're kind of looking into Beyond Meat, basically this company has two different parts of the company. It's got its retail, where it sells its products through retail stores, and then it has its food services. Its food services is obviously where it serves out at restaurants, and that kind of is like a 50-50 split. Now, food services at the moment, that's totally gone out of the company because restaurants are shut or running at a limited capacity, or they are just doing like curbside pickup, and basically that side of the company is basically really shut down. And that means that Beyond Meat have signed so many partnerships at the moment in the last kind of 6 months, but we can't see them in the financials yet because the food service part of the company is dead, but it's going to start coming back, and that's what Wall Street are missing. The retail side of it is still kind of operating pretty strong, and we'll go through them numbers today. Now, like I said, the food services, they've signed some amazing partnerships. We don't get to see that just yet, but we will get to see it in the next coming quarters, which is good. And I think this was the last one where we don't see much progress, but the next quarter, Q2, should be pretty strong. Now, it's quite funny because I bought into Beyond Meat about November 2020. That's when it had a bit of a sell-off. It had a bit of a sell-off when Wall Street realised the food service part of the company was going to struggle. Now, funny enough, Wall Street actually sold off the company after these earnings. And it's really funny because this is actually probably the last quarter. This is the quarter that if you've made it through all the way through, you shouldn't really sell, because this is the last one and we're going to see some recovery. And it just proves the fact how bad Wall Street are, and this is why so many people, or Wall Street in particular, why they underperform the market or perform in line with the market, is because they react off current events. They only kind of think, okay, 3 months ahead, what's going to happen, what's the next 3 months for Beyond Meat now after this quarter. And it's stupid because this would be the worst time to sell out, because we've already had the dip. These are the best times to go buy this company, when it's sold off. And you got to look at the problem they had with the food service side of the company. The food service side of the company is going to be a problem for the last 6 months. And we're kind of making our way out of it now, and we're actually going to see the recovery start to happen now. So to sell it out now is bonkers, because if you were going to do that, you should have done it 6 months ago. And it just proves the fact why it's so easy as us individual investors, why we can capitalize on things that we see, catalysts that we see that are going to start happening in the next 6-12 months, even longer than that, and why the share price is going to go up. And this is why, as individual pickers, we can actually really easily outperform Wall Street. And this is exactly an example of why Wall Street are missing on the recovery of the food service of this business that's about to happen. So we're going to go through Beyond Meat's Q1. And like I said, for me, this was the last awful quarter. We knew it was going to be an awful quarter because half of the company's still not operating. But going into Q2, we're actually, in my opinion, now going to start to see some of the recovery. And that was actually shown as well in this quarter, which was pretty good. I think overall the quarter was, it was probably a poor quarter, because obviously we knew the food service situation. But if we take that out of it and think, okay, for us, 6-12 months down the line, when the food service starts recovering, it wasn't too bad. There was a few positive signs in here. Overall, I'd probably give this one actually an 8 out of 10. So the first thing was production increase. We saw production increase once again in international, EU and China, which is really good. You know, you can't keep on selling these products without increasing the demand, the production, and also when they're signing all these contracts and this food service side recovers, it needs to be able to produce the food. So we saw a lot of production increase, which is totally fine. And also what that actually led to is that the internet, probably the best part of this earnings call was the international retail. The international retail grew at 189%, which is absolutely fantastic. I expected it to be a triple digit, but I expected it to be a low triple digit. So 189% was really, really impressive. And this is part of the company that is still, you know, running at full capacity. So this is where we do still want to see good numbers. And it definitely delivered. You can't tell me 189% international retail growth isn't impressive. Really, really good numbers from that point of view. Now the outlook was raised. It was raised to a very big guidance. It was 19 to 32%, which is a very big range. They did just do 11% revenue growth. So yeah, this is another jump up on the revenue growth front. So we can see here, management are starting to say, look, we are starting to see a bit of recovery. We're starting to get back to decent amount of growth. Obviously, when it gets to full capacity, it will be higher than 32%. We expect it to be probably above 50% at least. So it's still not like at where it will be when it fully recovers, but we're starting to see, you know, just putting 11% growth. But if they put 32% revenue growth in the next quarter, that's a very great sign of recovery happening. But even 90%, we're still moving in the right direction. Now, what kind of Ethan Brown said about this situation is that there's a lot of factors that can come into play in the next quarter. We don't know how serious the lockdowns are going to be. We don't know how much they're going to be eased. We don't know how much the summer seasons gets quite busy for Beyond Meat because you have like barbecue weather and everything like that, and the burgers being sold for barbecues and everything like that. But as well as that, we are starting to see the signs of recovery on the food service part of the business, which was what we wanted to hear. You know, Q2 is where we want to see the start of the food service recovery, and Ethan Brown did go on to say it's happening. You know, we are 30 days now into Q2, maybe we're actually a bit longer than that, but you know, we are entering Q2 and he said we are seeing the recovery. And just going around, you can see the recovery. You know, the US never shut down as much as other parts in the world, but even that has some recovery to happen. Even you know, the Europe, China starting to recover, especially Europe. Europe's just been, you know, everyone shut the doors in Europe and we're just starting to open up again. So that was a great outlook raise. You know, it was a very wide range they offered, but if we could get this, that would be very impressive in Q2. That would be, you know, to go from 11% to 32% would be a sign of strong recovery starting to happen. So that was really good positives that were in there. And everything that I'm kind of hoping, you know, Q2 for me is where I do want to see the recovery start to happen because everything is opening up and it would make sense for that guidance. So really good from that point of view. US, so this is 2020 versus 2021. All these numbers are millions. So there was one negative that I did have in the earnings call, which was the US retail. US retail was 63 million and it grew at 27%. Now for me, I would have liked that 27% to be a little higher. I would have liked it to be probably in the 40% range. The big standout thing with this one was in the actual conference call, or in the presentation, should I say, the amount of stores or retail locations that Beyond Meat was in decreased. Now, fantastic that an analyst actually picked up on this in a conference call and asked a question. They asked Ethan Brown, like, why was the amount of locations decreasing? And he said it wasn't anything to do with the product not doing well in the stores they currently have. It was that a lot of independent stores had decided to close the stores forever because of the CV lockdown. And because of that, the amount of retail locations they had, that's why they dropped, and that's why that probably didn't grow as quick. Now, he actually went on to say that after the end of Q1, which we, you know, obviously we're like 30 days into now, he said that in the start of the Q2 period, there is now 2,400 new stores that have opened up in Q2. So that kind of suggests that the amount of locations should carry on moving back in the right direction. And also, this number here, 27%, should be a little stronger. Like I say, I definitely definitely expected it to be more in the 30% range. My target would be more to the 40% range. So that was a one negative I did actually have with the presentation, the Q1, the conference call. But yeah, it sounds like Ethan Brown addressed that. It's just something to keep an eye on. That was the one negative that I did have. As always, if I do see negative, I will point it out to you guys, and that was the one negative. That's why I gave it an 8 out of 10. If this number here was stronger, it would have been a 10 out of 10 earnings for me. That's the one negative I did pick up on the call and the presentation. Food service, US food service. So this did decrease 26%. As you can see, the international was 44%. So it wasn't as weak as the international side of it. That's because quite a lot of the food services is still running at a decent rate in the US. There's a lot more, some restaurants are actually open, but people are not traveling out as much. There is still a lot more like curbside pickup, so it's not as bad as the EU side of it, but it's still not anywhere back to normal. March was the signs of recovery in the US, and April, May, June should hopefully see it kind of kick on. So hopefully this kind of kicks on. They did put 16 million in. Just to put that into perspective though, if it wasn't for the CV situation, it would be probably somewhere around like 44 million they would have put in. So that kind of shows you how much that food service impact is having. So yeah, when we do get around to 2022, I expect this food service number to be a bit more towards 44 million. So that shows you how much they have to gain from this side of it, and it gives them really easy numbers to beat actually going forward. International retail, like we said earlier, really, really, really impressive numbers. Historically, the actual food service part of the international has been bigger than retail. Now retail has actually overtook it. Obviously, food service, when we get back to 2022, that might actually re-overtake it again. But retail has actually overtaken food services. It grew at 189%, so that was really, really impressive growth on the retail side of it. That was the highlight for me of this earnings call. Really good. And on the food service side of it, like I say, it's down 44%. Obviously, like we said so many times, obviously that we knew that was going to happen, but it gives it easy numbers to beat. And just to give you that a bit of perspective, it would have been, in my opinion, we would have put nearly 36 million in on the food service if it wasn't for the CV situation. So yeah, that kind of gives you an example of 2022. We have a lot of room to beat that food service revenue. And yeah, that obviously gave it a total of 108 million revenue. If it wasn't for the CV situation, I would have expected it to be 162 million. So yeah, it kind of gives you a little bit of example here that how much that food service side of it has still to recover, and we'll put very good revenue growth in. And like I say, when we get around to this quarter, next time around, I think it will see some fantastic year-over-year growth on this quarter. And yeah, if it wasn't for the CV situation, I think instead of having a 11% revenue growth here, we would have had about 64% revenue growth. So yeah, overall, there's a lot of things here. We've got obviously the signs of recovery starting to happen. We have very impressive international retail numbers, and this food service side of it has a lot of room to grow. And like I say, I think next year when we come around to 2022, that food service side of it will put very impressive growth in. I think we'll see food service growth of over 100% in these two categories in a year's time, which will look amazing, and Wall Street will go, oh yeah, that's pretty good. We should go buy that company, instead of buying it 12 months ago when it's like half the price. So yeah, it just kind of shows you. But yeah, overall there was some really good things. I was obviously really impressed with that international retail side of it. The only one negative I really had, like I said, was that retail on the US side of it. I would have liked it to be a little bit higher than 27%. But yeah, I think overall everything going into Q2 does look pretty impressive. Q2 will be the first time I'm actually going into Beyond Meat with not thinking, oh, this is going to be another awful quarter. I think, like I said, this was the last push on the awful quarters. We are now entering the period of like, okay, we can actually start getting a little bit excited with Beyond Meat and what they pull out in Q2. And like I say, it's a very, very big wide guidance of 19 to 32%. Obviously, if we can put revenue growth in of 30%, if someone offers me 30% revenue growth in Q2 for Beyond Meat, I will very happily take that. I will take that. So we'll see what happens. Even 20% would be okay, but 30% would be really good. So yeah, we are getting around to Q2, which obviously is in 3 months' time, where I'll actually be going into Beyond Meat's earnings for the first time, going, okay, this might not actually be awful. We might have a decent quarter here. So yeah, very interesting. Now we'll see what happens. It's funny to see Wall Street actually sell out when the catalysts are starting to come into play. It just shows you how they always do so bad, I guess. But yeah, what leaves me with Beyond Meat now is I'm kind of like, I actually, when this happened, I did buy some more shares in Beyond Meat, so I'll share that with you guys. Obviously, you guys on the Patreon, you guys know that, but I guess if you're not on the Patreon, you wouldn't know that. I did buy some more shares. I'm very excited now going in forward into Q2, see what these guys do, and we'll see what happens. But yeah, that's the video on Beyond Meat and their Q1 earnings. Hope you enjoyed it. Like I say, I think Beyond Meat, DraftKings is one you guys want to see at some point, so I might do that for you guys at some point in the week coming up. I think Boohoo was very close as well, so maybe a Boohoo video. But yeah, let me know what you want to see. I might drop a poll, or I might just go for comments on this YouTube video. We'll see exactly what happens. But yeah, I hope you got kind of, if you're looking for a bit more information on Beyond Meat's quarter, that's my opinion for you there. Anyway, and like I said, I was quite happy knowing, you know, it was going to be an awful quarter, but it wasn't too bad. There's some good signs in there. But yeah, hope you enjoyed it. Smash the like button, subscribe if you're new and you found it helpful. Like I say, if we could get to 10,000 subscribers this week, that'd be amazing. I think we were like 180 or something short of it now. So yeah, if we could get to 10,000 this week, it'd be absolutely amazing. So yeah, if we could, that would be great. But hope you enjoyed it, and I'll see you on the next video.